You just sat down, and I love it, because you go, Brian, I've got some breaking news from our data here, which may explain why futures are moving up with oil. You're seeing some, I mean, literally in the last 30 minutes, some buying activity by your clients in the oil and gas sector.
Yeah, so we've definitely seen an increase in volume. I would say that we've been seeing it over the last week or so since the last attack on the oil tanker. So we've seen essentially Gush, our 3 beta S&P oil and energy related ETF, our 3 beta energy ETF, trading up about 100 to 200% higher than 20-day average daily trading volume. Yeah.
And by the way, so what she's talking about is these are basically, they mimic the move in oil or gas threefold.
They do.
So these are people placing pretty extreme bets.
Short-term
extreme bets, but they're bullish on oil because of, ostensibly, maybe these unfortunate attacks.
Yeah, absolutely. So this essentially decreases, or in theory, will decrease the supply of oil. And if demand stays steady, if you have OPEC cuts and you have some of this geopolitical stuff going on, it could positively impact the price of oil.
Yeah, and Tim Seymour, you know, I know that oil and gas as a percentage of the market has collapsed. It's about 5%, the lowest I think it has ever been. Yep. But it still matters. Would a slight uptick in oil potentially be a good thing for equities?
Well, it's certainly part of the risk appetite and the risk, we'll call it risk aggression. So if you add what the Fed did to what the ECB also has done, and people are less impressed by the ECB also because they have less room to run, you have a case where, first of all, you could be structurally cautious and tactically very optimistic here. And I think the other support for oil might be look at the dollar. I mean, the interest rate differentials between the U.S. and Europe have come in 110 basis points over the last, since the highs basically in November. You have a case to be made for a slightly weaker dollar in the short term. And certainly, again, if differential central bank measurements are also coming in, that will be dollar support. It'll be very commodity positive. And sure, look, energy's been a place where a lot of investors have waded into the water cautiously. A lot of times, every time they do that, they get whipped around. I still think the driver for oil prices is going to be global demand. Supply disruptions have a very kind of ephemeral effect, and I think we'll see.
I agree. Tactical optimism is a really good way to put it. You have a dovish Fed. You have potential optimism in G20, at least positive tweets coming from Trump and CCTV. You have oil prices helping the market. You know, the growthy names are starting to look good again.
And our people, Sylvia, you just told us they're betting big or bigger on these 3 times bullish oil and gas. Are they getting that bullish on just the macro equity markets? Are you seeing people, roll the dice and place big bets on stocks?
So just yesterday, the biggest inflows were in semiconductor bull funds, tech bull funds, China bull funds.
Leading indicators.
Leading indicators. So it's all of the fangy, growthy type stuff, which leads us to believe, again, that I think in the short term, at least people are bullish that the Fed will help push along expansion, that, potentially tariffs will have some sort of resolution sooner than later. Who knows? It might not go that way. But in the near term, we are seeing that pop.
Wow, near-term pop on semiconductor. Sylvia Jablonski, direction. Thank you very much.
Thank you.
Really interesting data. Tim, I tweeted out whenever I hear always, never, forever, 100%, I get a little bit nervous. A lot of people making big bets in the market. I was going to ask you about that, but I've got to ask you about something that just crossed. I'm putting you on the spot, buddy. I know you haven't seen the call.
Let's do this.
Okay, but I know you can handle it. I don't know if you saw. Moments ago, Goldman Sachs reiterating their underperform on Tesla, but cutting the target on Tesla to 158 from 200. The stock's at 229. So Goldman basically saying the stock's going to fall 30%. They simply came out, Tim, and said, we don't believe that the company's sales expectations are ultimately going to be met. We know you've got a lot of strong views on Tesla. What do you make of this call?
Look, I'm short the stock, and while you've seen a $40 move in the stock, it's still a move that I think needs to address the demand issue, the balance sheet issue, and effectively the company told you recently over a series of different announcements that you're going through a structural a restructuring. Let's stop using that structural word over and over again. It's a restructuring. But the bottom line is it comes down to demand for this company. So what's interesting with the street is the street now in $180 move lower in the stock in the last, 9 months is suddenly more bearish than they were, a lot higher. And it's a little strange, but it makes sense. Look, all the things are lining up here. I don't, as someone that's negative on the outlook for the company and positive on effectively the car, but that doesn't matter. The management team has done a poor job of addressing the balance sheet, in my view.